Hi, I am Anna. I come from www.ntvforex.com. Stimulus package not yet video. http ntvforex.com news ID FB7781 7/20/2020 10:44:53 am. US dollar September USD down at 95.795. Energies August 20th crude is down at 40.45. Financials The September 2030 year bond is up 9 ticks and trading at 180.00. Indices The September S&P 500 MNIES contract is 16 ticks lower and trading at 3,210.00. Gold The August 20th gold contract is trading up at 1,811.80. Gold is 18 ticks higher than its close. Initial conclusion. This is not a correlated market. The dollar is down and crude is down, which is not normal, but the 30-year bond is trading higher. The financials should always correlate with the US dollar such that if the dollar is lower then bonds should follow and vice versa. The S&P is lower and crude is trading lower, which is not correlated. Gold is trading higher, which is correlated with the US dollar trading down. I tend to believe that gold has an inverse relationship with the US dollar, as when the US dollar is down, gold tends to rise in value and vice versa. Think of it as a seesaw, when one is up the other should be down. I point this out to you to make you aware that when we don't have a correlated market, it means something is wrong. As traders you need to be aware of this and proceed with your eyes wide open. At this time Asia is trading mixed. Currently all of Europe is trading mixed as well. Possible challenges to traders today. No major economic news. Lack of major economic news. Treasuries. We've elected to switch gears a bit and show correlation between the 30-year bond ZB and the S&P futures contract. The S&P contract is the Standard & Poor's and the purpose is to show reverse correlation between the two instruments. Remember, it's likened to a seesaw, when up goes up the other should go down and vice versa. On Friday the ZB made its move at around 8 am East date. The ZB hit a high at around that time and the S&P moved higher. If you look at the charts below, ZB gave a signal at around 8 am East date and the S&P moved higher at around the same time. Look at the charts below and you'll see a pattern for both assets. ZB hit a high at around 8 am East date and the S&P was moving higher shortly thereafter. These charts represent the newest version of multi-charts and I've changed the time frame to a 15-minute chart to display better. This represented a shorting opportunity on the 30-year bond. As a trader you could have netted about 20 ticks per contract on this trade. Each tick is worth $31.25. Please note the front month for the ZB is now September 20. The S&P contract has been changed to September 20. I've changed the format to Renko bars such that it may be more apparent and visible. Charts courtesy of Multi-Charts built on an AMP platform. ZB September 2027 1720. S&P September 2027 1720. Bias. On Friday we gave the markets a neutral bias as we saw little evidence of market correlation. The markets closed mixed as the Dow dropped 63 points but the other indices gained ground. All in all it was a mixed or neutral day. Today we aren't dealing with a correlated market and our bias is neutral. Could this change? Of course. Remember, anything can happen in a volatile market. Commentary. On Friday there seemed to be much emphasis placed on an upcoming stimulus package. Mind you that the House of Representatives had passed one in May and from that time to the present the Senate has done nothing but sat on their laurels. Friday, July 17 marked the end of their recess as though they really need one, and it's assumed that Monday the 20th they will start to look at what they're willing to put into a new stimulus package. The GOP isn't too keen on providing either additional unemployment benefits or a one-time payment likened to the $1,200 per person we saw earlier this year, and if they give a one-time payment, it will be less than what was given earlier. This is where they're not getting it. This isn't a handout as some would think. This is an investment in us, the USA. It's been proven that monies given to the American people go right back in the economy via purchases of goods or services, and given that 70% of this economy is predicated on consumer spending, that money given will go right back out. Time will tell how this all works out, but we expect a congressional battle ahead. Subscribe our channel to receive the news as soon as possible. Thank you for watching.